What's up guys, Alvaro here. Welcome to the Bilingual Stock Market channel again. In this channel we talk about the stock market and we do it in two different languages, English and Spanish. So if English is not your cup of tea, you can also watch this very same video narrated by me in Spanish. So guys, 2021 is finally here. Happy New Year to you all. 2020 was quite a crazy year for everybody and especially for the stock market. And during the last days of December, we saw a bunch of stocks getting absolutely decimated in the stock market despite the market as a whole did pretty well during the last week of December. So in this video, I will be breaking down 5 hot stocks that sold off aggressively during the last days of December and that I have on the top of my watch list for the first week of January. So without further ado, let's get started. Okay guys, and the first decimated and beaten down stock on my watch list for the first week of January is going to be Opendoor, ticker symbol OPEN. The online real estate company in which you can either sell or buy your home online. Opendoor recently merged with IPOB, which was a special purpose acquisition company, and this merge implies a valuation of $4.8 billion for Opendoor. And something that is worth pointing out about this company is that Chamath Palihapitiya is investing $1 billion in this online real estate company. Chamath Palihapitiya is a very well-known investor in Wall Street and former senior executive of Facebook and also chairman of Virgin Galactic. And check this out guys, Open is currently trading 32% off its highs. So from a long-term perspective, and for those who like the way Chamath Palihapitiya invests, this is a very nice discount. But from a technical standpoint, we can see that Open is currently downtrending, as you guys can see over here and below the 50 and the 180 SMA line. So we can also notice on the 4-hour chart that $22 was a former resistance from the beginning of December, and it acted as a support as well on December 29th, right? The RSI for Open is at 33 points, so Open is pretty much at oversold territory or getting closer to oversold territory. But for me, in order to take a trade here, I have to see Open either holding 22 bucks consistently or breaking out above this downtrend channel around $24, in which case Open could potentially fill the gap up to this green line, to the 50 SMA line, alright? So watch out for Open guys during the first trading sessions of January, either holding $22 and potentially filling the gap up to $27 or $28 a share, or maybe breaking $22 to the downside, in which case we could potentially see Open trading or getting down to $18 or $19 a share. Okay guys, and another stock to keep a close watch on during the first week of January and that also got absolutely decimated during the last week of December is Fubo, Fubo TV, ticker symbol FUBO. Fubo or Fubo TV is a United States streaming television service that focuses primarily on channels that broadcast live sports, including the NFL, the Major League Baseball, the NBA, international soccer, plus news, network television series, and movies. But what might make Fubo TV different from other streaming services as Roku TV is that the company announced during its latest earnings report plans to expand their streaming service into sports gambling. And as you guys can imagine, if Fubo TV can actually expand its operations into gambling, that would increase significantly their revenue. But as of now, for those interested in investing at a long term in Fubo TV, keep in mind that Fubo is not a profitable company yet, but from a long-term perspective, we find Fubo as of now 55% from its all-time high, right? And that's a very attractive discount from a long-term perspective. Okay, last week Fubo fell off a cliff after a short seller report of Kerrisdale Capital came out saying, and I'm gonna read here for you guys, that this company trades at valuations completely divorced from reality at 15 times 2021 estimated sales, equivalent to $13,000 per current subscriber. So this is the opinion of Carousel Capital, and I ask you guys, what do you think about Fubo TV? Is it too overvalued? Do you guys think that if Fubo can actually expand its operations into online gambling, that might help the company to turn out into a profitable company? Please drop a comment down below and let me know your thoughts. When it comes to trading Fubo, we find on the 4-hour chart a very nasty chart, guys. This looks horrible. So, as I said before, if any of you guys is bullish on Fubo and wants to start a long-term position, this is the best moment ever to start a long-term position on Fubo, because we find Fubo as of now something like 57% of its highs. So from a long-term perspective, this is clearly an opportunity. But from a trading standpoint, I don't want to be a hitter here, guys. This looks like a falling knife. So I don't want to guess the bottom. And for me to take a trade over here, I need to see Fubo consolidating at around $27 a share, which acted as a support during the first 15 days of December, right over here in this area, okay? Before Fubo made this parabolic move to the upside, in which it got up to $63 a share. So I need to see some sort of consolidation around $27 a share before considering taking a trade over here. We have a strong resistance coming up at around $29 or $30 a share, where you guys can see this yellow line, the 180 SMA line, and the RSI on Fubo is at 29 points. So Fubo is clearly oversold. We might see a relief rally coming up during the first week of January. So from a trading perspective, I'm gonna be keeping a close watch on Fubo. If I see some sort of consolidation around $27, I might take a position, or maybe if I see a clear reverse of this downtrend, I might take a position if Fubo happens to break $29 or $30 a share to the upside, okay? And another stock that I will be watching during the first week of January, and that also got crushed during the last days of December, and that I am actually swing trading as of now, is DraftKings, ticker symbol DKNG, the online betting site which fell almost 15% during the last week of December for no reason really, because no bad news came out about this company. And guys, something that you must keep in mind about DraftKings, and I have been saying this in every single video that I have talked about DraftKings, is that this company upgraded their revenue guidance for 2021, all right? And that is something very positive for any stock or for any company out there, from both perspectives, from the short-term perspective and also from a long-term perspective. And when it comes to trading DraftKings, guys, obviously we don't see a good-looking chart. This is a nasty chart as well. Just like the other stocks that I have told you guys about in this video. But in the case of DraftKings, guys, this is a very volatile stock that can go both ways, north and south, very quickly, all right? And we can see on the 4-hour chart that $46 was a support back on December 8th, and also it was a resistance back on November 13th, right over here. So I think that DraftKings is very unlikely to break $46 to the downside. It could happen, but I don't really see it happening, right? Maybe I have a bias because I am swing trading DraftKings as of now, okay? But if DraftKings happens to break $46 a share, it might find support at around $42 a share, which was a very strong resistance 1, 2, 3, 4, 5 times, 6, 7 times, okay? So watch out for DraftKings, guys, either holding $46 a share and pulling back up to $50 or $52 a share, where you guys can see this 50 SMA line, or breaking $46 to the downside and finding support at $42 a share, which would be a very good enterprise for this stock. And the next stock that I want to analyze in this video, and that has been decimated and crushed in the last days, is Snowflake, ticker symbol SNOW. the cloud-based data company that IPO'd this year and in which Warren Buffett's Berkshire Hathaway invested $800 million in. Snowflake has been getting crushed since it reached all-time high at around $429 a share back in December 8th, and as of now we have a very attractive 34% discount on Snow. For those interested in investing in Snow at a long term, please keep in mind that Snowflake is not a profitable company yet. This company is supposed to have a very profitable future ahead of itself, but as of now, this is a money-burning machine. And when it comes to the technicals of Snow, we have another nasty chart, guys. We can see a clear downtrend on the 4-hour chart. Snow is as of now below the 50 and the 180 SMA line, but here there is a very interesting detail, guys. The RSI of Snow is at 20 points. Okay, almost off the page. So Snow is as of now extremely oversold, and on last Friday it held $279 as a support, which was a support as well back in the beginning of December and during the last days of November. So I think that Snow is due for a relief rally, holding $280 as a support and climbing back up to the 180 SMA line around $300 or $300 a share. However, if Snow fails to hold $280 as a support, we could see more downside, guys, maybe to $250 a share, okay, which would be actually a good opportunity for the bears out there to short the Snow buying put options. So watch Snow, guys, either holding $280 a share and filling the gap up to the 180 SMA line at around $300 or $303 a share, or failing to hold $280 as a support, in which case it could fall furthermore down to $250 a share. And the last and fifth stock that I am going to be talking about in this video is Beyond Meat, ticker symbol BYND, the plant-based meats company, guys. I already told you that I am vegetarian and that I love Beyond Meat's products, obviously, right? But aside from my vegetarian bias, I am very bullish on this company, guys. I really like the upper management of Beyond Meat because they are always working on deals with companies like Starbucks Coffee, McDonald's, Dunkin' Donuts to sell their products in those very well-known stores. Beyond Meat is already selling their products in China, okay? And I personally believe that in a world where so many people are into fitness and healthy eating habits, Beyond Meat will keep on growing up, okay? And as of now, we find Beyond Meat 36% off its highs, all right? And last week, specifically, it dropped from $140 a share down to $123 a share. And on the 4-hour chart of Beyond Meat, obviously we see another nasty chart, just like the other stocks that I have mentioned in this video. Obviously, this video is about decimated stocks, but in the case of Beyond Meat, guys, specifically, we have a promising chart. Why? Because Beyond Meat is holding a critical area of support at around $123.46 a share, okay? This is a critical support. This area has been a critical support for Beyond Meat, okay, in the past. And I am actually swing trading Beyond Meat as of now, and my average price is around $124 a share. And the RSI of Beyond Meat is at 32 points, so yeah, you can make the case that Beyond Meat is arguably in oversold territory. So I see two scenarios over here, guys. If Beyond Meat cannot hold $123 a share as a support, we could see $120 a share coming up, which would be a spot in which I would be buying more shares. In my opinion, $120 a share for Beyond Meat, in the case of Beyond Meat, is a screaming buy. In my opinion, remember, I am not a financial advisor, okay? So, two scenarios here, guys. If Beyond Meat fails to hold $123, we could see $120 coming up, all right, which would be also a very strong support and a screaming buy in my opinion. Or if Beyond Meat holds $123 consistently, it could easily fill the gap up to the moving averages, to the 180 SMA line and to the 50 SMA line, which these two lines coincide at around $135 a share. Okay, so what's beyond me, guys? Either pulling back to $120 a share and holding $120 a share, or pulling back up to the moving averages at around $135 a share. Okay guys, I'm going to wrap it up here. Thank you very much for your attention. Please hit the like button for me and consider subscribing to the channel if you guys haven't done it yet. I wish you guys a very happy and profitable year 2021. Keep on crushing the markets. Remember, this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the stock market in 2 different languages, but most importantly, the YouTube channel in which we know that the wonderful world of the United States stock market is not for geniuses. It is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys in my next video. Peace out.